Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, April the 4th. Starting off as usual with the FTSE 100, which has dived a death at the moment. We were speculating that this market might actually head down to the 84.80 area, but obviously that was yesterday's closing zone or just below it. And then we've gone straight through not only the 200-day moving average, but the floor of that rising trend channel, which has been in place since the end of 2023. So a lot of the good work of the recent past completely blown out of the water. And what's left is that we've got the May, November, December support area around 8,000 as the potential destination. We were warned by the triangle breakdown through 85.60 and also obviously the break of the late January support there around 84.65. Interesting that we managed to fall through the 200-day moving average as it wasn't there, and also the floor of that rising trend channel from late 2023, 82.80, let's call it. Below 82.80, there's the chance of that test of the 8,000 area. RSI now at 22, which is good in a way in the sense that normally in the recent past, which we can go back to the various points there in 2023, 2024, anything sub the RSI 30 level has been a buy point, and presumably if we can get through today below the RSI 30 area, then that might be an opportunity for buying over the week, over the early part of Monday. These situations tend to be 3-day wonders, so we are right in the middle of that, and either the end of play today or opening on Monday would be the potential catch the falling knife point. Otherwise, it's the 8,000 area if we get that low. Interesting also that we've got the ISA, the last day of the ISA buying situation coming up, so maybe those brave souls might have decided to, or may be deciding to get their allowance before the new tax year. On the upside, the earliest point, the earliest buy signal intraday would be an end-of-day close back above the initial 2025 support there, around 81.80. So maybe watch out for that if you're an aggressive trader. Moving along to the DAX, and one would say that here the carnage equally painful. We were factoring potentially heading down to the first gap there back in February, 21,500, but obviously that's been blown away. We're currently near the old December resistance around 20,500, and given the lay of the land, it's rather difficult to avoid the idea that we will trade down to the 200-day moving average, 19,900, before this sell-off is over. The start of the carnage here was signaled by the island top there, so gapping up in March and then gapping down. So really the sell point there was on that basis was 22,600, but obviously we've had other indications since then. The break of neckline support 22,200, the first or the second of them after that. But at the moment, the betting is on a test of the 200-day line. Maybe something like what the events of August, where we went a little bit lower than that and then rebounded sharply. RSI at 29, so near to the area of, in the area of being oversold, but on alert for a rebound. Moving on to the Dow, and this is obviously the culprit or the villain of the piece. And here you can see that we gap down to that support line projection there from November, but presumably going to be much lower today. Next level down around 40,000, and at this stage probably gunning for the 38,500 area August support. You can see we've had 3 RSI 50 failures in the recent past. The first one at the end of February, second one in March, and the latest one now, and that does show how powerful that signal can be, even if it's in the rear view window. Best at the moment is that we may have an end of day close back above the March support area, 40,700, and then that takes us higher. But obviously that would be catching the knife, falling knife situation. The Wall Street currently at 39,200, so indicated at that level. So it really is the June-August support area at 38,500, which is in focus at the moment for this market. Moving along to Bitcoin, which hasn't escaped the horrors of the tariff wars, but at least we are at the floor of that rising trend channel from March last year, nominally just below it, 83,000 the level of that line, but obviously this is not exact science. At least while we're in the 80,000 to 90,000 zone, bulls of Bitcoin can at least feel that this market hasn't fully broken down, or will not continue to break down to the mid 70,000s area. On to gold, and here, if I can get the market up, we can see that this has been a mighty bull run, but interrupted by yesterday's fall from the 3160 area. The obvious area for this market to find support now would be the floor of that rising trend channel from back in November, around the $3,000 an ounce level, and might be time to tighten that channel a bit up to the 3,300 zone rather than 3,400, the zone that we were looking for as a best case scenario by the end of next month. Moving on to the stocks, and quite an esoteric selection at the moment. First one is Artisanal. And here we've had a unfilled gap to the upside off the lows, which tends to be a very solid signal, especially when it's combined with bullish divergence. So we're looking for 42 pence, and probably a lot more actually, given that signal. Next level up would be towards the old support there in the low 50s support line projection, which is the upper parallel of the falling trend channel that we have at the moment. This stage, ideally, we stay above that 50-day line at 33 pence. Moving on to Argentex, which from memory had a decent update not too long ago, a few days ago. And here we can see, if I can type it in, and it appears, then we've had a decent turnaround for the shares above a rising 50-day line. Initial target here, 51 pence. Best case by the end of next month up to 72 pence, although given the current market conditions, one might not want to get too excited. The main thing here is that we stay above the 50-day line at 40 pence, and we've had double and triple bounces above RSI 50, which at and above RSI 50, which tends to be a positive leading indicator. Moving on to a stock which I haven't covered for ages, largely because you can see from the chart it hasn't had a great run, but yesterday was a very strong candle. Today a bit of follow through, even on a horrible day like today. Best case at the moment up to 18.5 pence, while we're above the recent, the support line and the floor of the channel there at 13 pence, above 13, looking for 18 on Hvivo, but highlighting that the shares have delivered a turnaround. Onto Mkango, which looks like it's one of the beneficiaries of the China moves, the tariffs, or the moves to stop the supply of rare earths, which was not exactly a surprise. Here we've got the top of a rising channel there at 19 pence as the target over, hopefully by the end of this month, and looking actually for much more than that, given the solidity of this trend channel. Probably looking for actually up to the low 20s. That would be a better fit of the price action that we're seeing at the moment. And ideally we stay above the latest support there at 13 pence, above 13, looking for as much as 23 by the end of next month. An uptrend line in the RSI window as well, backing that situation. Another stock which has been, probably the stock which has been the most strong in this horrible market has been Met1, up 32% today. It's on its third target there at basically 20 pence. Above 20 pence, we've been looking for 40 pence by the end of next month, which is a punchy call, but it's been a punchy stock over the near term. And surprisingly enough, other than people being bearish on it, there's been nobody else positive about it at all, which I suppose makes me feel rather good. Moving on to Narf, where there were a few people poo-pooing the update today, but actually they may have forgotten that the shares are already near the low, so any negatives in the RNS are already factored in. 0.8 is the top of that rising trend channel base, and we're looking for that while we're above recent support there at the 0.48 zones, above 0.48, looking for 0.8 on Narf at the moment, and hopefully get that
by the end of this month. A winner from the China fallout is Pensana rare earths. In fact, anything with the rare earths in it at the moment should be ready for action, including Altona and Harina, etc., etc. I'm trying to remember all the other ones, actually. But above the 200-day line at 21.6 pence, looking for 35 pence on Pensana, which we have, to be fair, been looking for quite some time. Predator is next, and here, surprising that it's up on a horrible day for the stock market. But what's interesting here, we've got very strong candles. Last 3 days, we've had the shares opening at the low, closing at the high, which you don't get very often, and is at odds with the market sentiment towards the stock at the moment. This moment, we're looking for the shares to reach 5 pence later this month, or during this month, while we're above the 3 pence area. So let's see if the shares can finally deliver the goods. RSI at just under 50. We need to get that above 50 to feel a bit better. One of the tariff winners hopefully will be Phoenix Copper. It hasn't moved today, but having all its main asset in the US is obviously good for trade wars, or the trade war situation. Waiting for an end of day close above 4 pence to take us up to as high as 6.5 pence, hopefully by the end of this month. Ideally, we stay above the floor of the channel there, around 3.3 pence in the meantime. Moving on to Shuka, which I'm covered for ages as well, but you can tell from the chart why that might be. Here we've had a gap close fill for the shares, and that suggests that we could at least get up to the 4.7 pence area while we hold above the top of the gap there at 2 3/4 pence. Sareum, another unlikely winner on a horrible day for the market. Here, my shares up 24 pence. Again, it's one of those situations where I simply feel like I'm the only person who actually looks at the stock. Here, we've managed to fill the March gap up to 16.6 pence. Need an end of day close above that, which is not much to do, to give us a potential target of 32 pence by the end of next month. On to Sealand, which I like looking at, partly because of the amusing name, but also the very active price action. Here I did tweet out a couple of days ago that it's all about the 200-day line. That's now at 1.35. Below that we are, I suppose, a sell into strength. Above that we could be off to the races, but obviously a very volatile situation, not for widows and orphans. Finishing off with Team, and here you can see that one of those situations where it's been in a horrible bear run, but we actually had an unfilled gap to the upside off the low. In fact, that completed a bear trap island reversal, and that is one of the strongest signals around. That could suggest that we have the low in place, and above 11 pence on a mid-close basis. We are looking for 17 pence by the end of this month. That would be quite a decent turnaround. That's it for me today. More updates over the weekend and whenever necessary, given current market conditions.